We are here with the Cuban sensation, Mark Cruz of N-Source Financial. Am I saying that correctly?
Perfect, actually.
Okay, and
Cuban
we are
sensation.
going to,
I like that.
Yeah, we are going to talk about. Actually, we're going to get in depth when with respect to obtaining mortgages for Canadians specifically. Fuck everybody else, just Canadians. All right.
Easy.
Perfect. And my understanding is you're an expert on this. So why don't you introduce yourself?
Hey, everybody. So my name is Mark. I've been financing in Florida for 29 years. It'll be close to 30 years in October on my birthday. I do a lot of foreign nationals. It's something that I've done for a while. I've been having the pleasure of working with Vito for the past couple of years.
Sure, it's a pleasure.
Yeah, definitely. I love his clients. And as a matter of fact, since we've been dealing with Canadians for foreigners for the past, I would say, year and a half, I've done a lot of these Canadians, and we found the best financing available for you guys or for Canadians in the U.S. And it's funny because a lot of people thought it was super complicated to finance these homes. And when you dig into it, it's actually quite simple, and there's a few options available. So it's not only one type of financing, multiple financing available for any type of scenario that you're in.
Okay, perfect. So the reason that I wanted to interview you specifically is because of the mystery around financing in a foreign jurisdiction, specifically in Florida for Canadians. So, Canadians are heavily dependent. I don't know if you know the financial situation there, but we're heavily dependent on the big banks in Canada. So you're going to have these big banks, TD, RBC, so on and so forth. And they sort of dominate the mortgage industry. They in fact, dominate the financial industry, whether it's investments, mortgages, banking. It's a very different situation to here in the United States, where there's quite a bit of competition in the banking and lending industry, right? So a lot of Canadians want to buy in Florida. And like I was saying in a previous episode here, there's about 500,000 Canadians that own property in Florida. 95% of those deals are closed in cash. My suspicion is that there's a certain percentage of these individuals that buy these particular properties are just so rich they can do it in cash.
Or they didn't know they had the option of financing.
That's where I'm getting. So the overwhelming majority of people that approach me or discuss with me as their financial advisor, purchasing properties in Florida or purchasing properties somewhere in the United States, is that they cannot get financing here in the United States. And obviously, that is an absolutely incorrect statement, correct?
Of course, 100%.
Right.
It happens here in the United States too. In the U.S., big box banks, even though they take care of 95+% of people's banking, they're not the best option when it comes to financing your home. We've heard horror stories of clients trying to get approved for their loans through RBC and some of the other options in Canada, but once they jump the border, it becomes increasingly difficult, and it ends up wasting a lot of time and never going anywhere. And that's why people have that stigma or that myth that getting financing in the United States is hard. It's not difficult if you're going through the right avenues. And like I was saying earlier, we have multiple avenues where you can go through. There's standardized banks that will give Canadians actually amazing rates. Right now, right before this podcast, I pulled rates for all three types of loans. And if it's okay, we can dive into some of those options for you.
No, for sure. I want to go into those options. And if you could elaborate on really the three types of properties that I want to cover in this particular episode. One would be a personal use property. Mm-hmm. I just want to use it myself. I don't want to use it as an investment property at all. Okay. Second would be a hybrid use property, which I would potentially use myself, but also put onto some sort of a platform like Airbnb or Vrbo and temporarily rent it out. And third would be a pure investment property, like a long-term buy and hold, either condo, single-family home, or multi-unit residential up to 4 units. Because my understanding, as we were discussing off camera before, above 5 and above is commercial lending, not your cup of tea, right?
Exactly. It's not my expertise, so I wouldn't be able to give people the exact information like I have in residential. And exactly, 4 units and under, 100% residential. As long as you're giving 25% down on this property, so a quarter of the property value down on single-family homes, you're almost guaranteed financing.
Okay.
And if you give 30% down, just 5% more down, that's usually required on condos. But also, there's a third option for financing that even if you don't I mean, as long as you have a heartbeat and 30% down, you'll get financing in the U.S.
Okay.
So there's definitely a way to finance for almost everyone as long as they have that minimum investment required.
So let's get a little bit more specific then. I'm coming to Florida. I've got $250,000 in the bank, and I'm looking at properties somewhere in the range of $700,000 to $900,000. All right. I don't want anybody ever using this property other than myself and my family. All right. Do I have enough money down? And what does the qualification process look like for a Canadian in this very narrow circumstance?
Okay, great question. So if you're planning on using this property only for yourself and your family, they don't consider it an owner-occupied home because you're Canadian, right? Your main property is going to be in Canada, so they'll consider it a second home.
Okay,
So
like a
this
cottage or something.
like a vacation home, second home. You're not planning on renting it out. And the first bank that I spoke to you about is the perfect bank for this because they have the best rates by far. 7.5% start rate. It's fixed for 3 years. Okay. It has a 3-year prepayment penalty. So in the first 3 years, if you pay off that loan to zero, you pay a penalty, but it's super small. So it's called the sunset prepayment penalty. First year, it's 3%. Mm-hmm. If you pay it off in the second year, it's 2%. If you pay it off in the third year, it's only 1%. And after that, there's no penalty whatsoever.
Okay. So if you did need to refinance or you did, now this is a fixed rate, not a variable rate?
It's fixed for 3 years, and then it turns into adjustable. The adjustable rate is actually something that foreigners like a lot. Because I know in Canada, the rates aren't fixed like here in the U.S. for 30 years at a time. You guys have like 5-year periods, right?
Yeah, by law, it's a 5-year period.
Right, correct. So it's more similar to what you guys have back home,
right,
where it's fixed for either 3, 5, or 7 years.
You
can choose. The 3-year option right now is at 7.5. If you want like a 5-year fixed, it'll be 7.7. And if you want a 7-year fixed, it'll be a little bit higher. But it starts at 7.5, which is solid. And also, right now in the U.S., the rates are extremely high. It's the highest that they've been. The good news is that rates are only going to start going down from here. So if you start at this rate, then the rates will more than likely float down a little bit towards the end of the year and next year.
Okay. So then it's... go ahead.
So sorry, just to clarify, is the rate locked for 3 years or it's adjustable?
It's locked for 3 years at what you sign at closing.
Got it.
And then
it adjusts
after those 3 years, it's
annually?
when it adjusts every 6 months, correct.
Okay, so it's like
twice a year.
A 3-6 arm. Or
yeah, it's a
like
2-2-6, exactly.
Okay. Right.
So 2 is the caps. It can only go up twice a year. It can only go up 2% the first time it adjusts and 6% over the life of the loan. But again,
but that would be in the unlikely but possible situation that rates just skyrocket.
Right. If rates all of a sudden,
because it has happened in the
70s,
past,
right?
Yeah.
We're back in the 1970s, when the rates went up to 12 and 17%. You're capped at 6% over whatever your start rate is at. So you'll be capped at right now. If you're starting at 7.5, you'll be capped at 13.5.
Okay. So then you answer my first big question: is it possible?
Yes,
it definitely is. My next,
it's a great rate, great mortgage.
My next question was, how much do I really have to put down? You clearly answered that: 25 to 30%.
It's a single family home,
for
25% down plus your closing costs. Now, for Canadians, most U.S. banks are going to ask for something called reserves. Okay. So it's extra money that you have to show. You can show it either in Canada or in the U.S. It doesn't have to be in the U.S.
Okay.
And you're not going to use it for closing. What you're doing is you're showing the lender that you're buying this house that in case the shit hits the fan, right?
Yeah,
in case the economy goes to hell, everything is messed up.
Or the property falls apart.
12 months put away in a separate account.
Got it.
Again, not in the bank's account, not in there. You just have to show that with 60 days of bank statements.
So we don't have to put it in escrow or anything like that.
You do not have to put it in
You just have to provide proof of funds.
60 days of bank statements where the money's been for the past 60 days, and we're good to go.
Okay. So we know that we can definitely get a loan. Yep. We know that it's a reasonable down payment, in my opinion, somewhere between 25 and 30%, depending on the type of property. Correct. Higher for condos, lower for single family homes.
5% more down for condos.
A relatively reasonable rate for a foreigner.
The rate is fantastic.
Yeah,
that rate's good for a principal
American,
buyer.
right?
American,
oh yeah, it is. Okay.
Rates are hovering right now. I was just looking 6.75 to 7.
No, but what I'm saying,
on a 30-year fix, that's the key, right?
Right.
So I think we're at a point where the ARMs are starting to look a little bit more favorable. I was looking at some, non-foreigner loans, and a 5-year ARM is now sitting at 5.75%, right? Versus there's this whole notion of the 30-year fixed. But think about it, right? Anytime you refinance, that rate goes away anyways. And the average American buys, sells, or refinances every 5 to 7 years. So you're almost always better off just banking on
variable.
The variable rate. Yeah, you guys call it a variable. We call it an ARM adjustable rate mortgage, right?
I mean, historically speaking, the adjustable rate mortgages have always done well, but it depends on what part of history you're looking at.
Sure.
Right?
What
When
snapshot,
the bond rates have dropped, obviously it's going to be way better for variable. Some people want that certainty, but I guess the idea is they have the option. They don't have to look into a crystal ball and try to figure out what's going to happen over the next 10, 20, 30 years. If they want fixed and they're like, listen, I don't give a shit if it's going to go up or down, but I want to know what I have to pay for the next 30 years, then it's something that they can do.
The only person that's good for is a person that's going to hold that note for
Forever.
30 years.
Yeah.
Because the minute 5 years in, 6 years in, 2 years, you refinance, you're at the mercy of where the rates are.
Exactly.
100%. If you're refinancing.
If you
refinance. But like Vito was saying.
But again, the average American sells or refinances every 5 to 7 years.
Right.
Now, we're in a really weird market right now where we have this lock-in effect.
Yeah.
The golden handcuffs.
We call them the golden handcuffs. If you watch some of our other videos, where a lot of Americans, I'm talking like 60 to 80%, are locked into a rate
Under 3%.
Under 3%. Okay?
So they can't refinance.
They can, but it doesn't make a lot of financial sense.
They can't move.
They don't want to move.
Not even that's why we have this lack of inventory.
Yes.
Can you not port the mortgage? I know this is not irrelevant to what I.
No, I think it's important.
But I want to know,
There's
right?
actually
relative, right?
assumable mortgages.
There is if it's a federally backed mortgage, but it's assumable at its current balance.
Exactly. So let's say Vito has an assumable mortgage with a balance of $300,000, and he's selling me the house for $500,000, and he's got a 2%. I can assume his 2% rate if I give the $200,000 down as difference.
Right. Or can you get a second mortgage for the difference?
No, they're not doing subordinate financing for that, man.
Really?
You gotta come up with the money.
Or if the owner holds
Or
a
the
note, you
owner
can do
Can
a
a
private
foreigner
mortgage
assume a residence
No, 'cause
mortgage?
you have to qualify for the assumable loan. You have
As
to
primary
do,
residence.
Correct. Primary residence, have the credit score necessary, go through all the hoops that Americans have to jump through, which is funny because foreign national loans a lot of times end up being easier loans than Americans because the bank that asks for tax returns that has the 7.5 rates, the ones that we're talking about now, it's full income calculation just like for Americans. But the other two options, they're not even asking you guys for income or anything else or credit. If you don't have, by the way, this is super important. A lot of people think that if you don't have credit in the U.S., you can't buy.
Right.
Absolutely a myth. They'll get credit reference letters from a few of the places where you bank now. Like they'll go to TD and they'll say, how long has this guy had accounts for you and are they in good standing? You do that with 3 companies, basically you meet the credit requirements.